Hey everyone, welcome to today's pre-market explainer. I'm going to be your guide, hanging out right down here in the corner, to break down exactly what is driving the Indian stock market right before the opening bell rings this Wednesday, July 29th, 2026. We've got some absolutely massive gap up signals today, plus a really heavyweight earnings roster to digest, so let's just jump right into it.
All right, so let's dive right into this massive hook. The GIFT Nifty is currently trading at 24,301. That is up almost 0.9% from the previous close. So what does this actually mean for us? Well, it's a very strong signal for a 297-point gap-up opening for the Nifty 50. After Tuesday's kind of flat profit-booking session, we are poised for a highly explosive open today.
Okay, moving on to part one, the global setup. Let's look at the overnight cues that are driving today's sentiment.
So this morning's tremendous optimism is really being fueled by green screens all across the globe. Asian markets are bouncing back heavily from Tuesday's sell-off. You've got Japan's Nikkei and South Korea's Kospi, both up roughly 1%, largely aided by some strong tech earnings. Over in the US, the Dow climbed 1% as investors kind of rotated out of tech. Oh, and definitely keep an eye on commodities today. Oil prices are swinging higher on renewed Middle East tensions.
Next up, part two, key market levels today. Let's break down the support and resistance.
Here is your literal roadmap for the opening bell. For the Nifty 50, given our massive gap up, you'll want to pay very close attention to that resistance zone sitting between 24,000 and 24,300. If we push into that territory, the momentum could absolutely trigger a breakout. Now for the Bank Nifty, we're sitting on a massive support block starting at 56,500. Honestly, keep these ranges taped to your desk today as that initial volatility hits.
But, here is the real curveball for today's session. The broader macro sentiment might just take a back seat. Why? Because Wednesday is one of the busiest earnings days of Q1 FY27. This tidal wave of corporate data is going to dictate the market direction, and it's going to drive some really fierce stock-by-stock action.
Which brings us to part three, the heavyweight earnings roster. Here is the stock-specific action you need to watch.
Across the fast-moving consumer goods sector, FMCG, we're watching a really fascinating tug-of-war play out on the balance sheets. In one corner, you've got this great positive catalyst of recovering volume growth, with rural demand actually outpacing urban buyers right now. It's a great sign. But pulling in the complete opposite direction is immense margin pressure from rising crude and raw material costs. So today's narrative, it's all about who is actually winning that battle.
Let's get specific here. Asian paints is up first, and while analysts project a super healthy 14 to 17% revenue spike, margins are the absolute ultimate metric to watch here because of those crude costs. Are they going to dip? We'll see. Next up is Dabur India. They've guided for double-digit growth, but the key takeaway is their operating margin. Historically, it sits really tight at 20 to 21%. The big question is, can they defend that line? With Colgate-Palmolive and P&G Hygiene also reporting today, this FMCG space is just going to be incredibly active.
And wow, the heavyweight roster doesn't stop there. We've got major market movers across multiple sectors hitting the wire today. We're talking Adani Enterprises, Adani Ports, Eicher Motors, Bajaj Housing Finance, Piramal Pharma, Star Health, and Prestige Estates. With a lineup this dense, stock-specific action is absolutely for sure going to dominate today's trading volume.
All right, finally, let's get into part four, F&O expiry and wrap. We'll look at the derivatives market mechanics.
So the calendar is throwing an extra layer of complexity into today's mix. Today actually kicks off the brand new monthly futures and options series for the NSE. Throw in the fact that the BSE Sensex monthly expiry hits tomorrow, and well, these rollover mechanics could trigger some very sudden intraday volatility as traders try to digest all that heavy earnings data.
Which brings us to the ultimate question for today's session. We know we have a nearly 300-point gap-up indication, right? And we know we have a literal tidal wave of Q1 earnings hitting the market. So, will today's robust earnings data actually justify this massive morning gap-up and sustain the momentum? Or will profit bookings strike again once that initial morning euphoria wears off? Keep your eyes on those support levels, let the data guide you, and hey, thanks so much for joining me for today's pre-market report.